Welcome back, and joining me for a closer look at what's played out in the market scene today is Viv Govender from Rancis Offshore. Thank you so much for your time, Viv. Actually, the markets across the board today are in red territory. Even the JSE making a turnaround after the gains from yesterday, but trading in red territory today. What's got the markets in a tip today?
Well, I think in our local market, the resources sector is doing quite well at the moment. It's up at about just over 1% for the day. And we've seen resources do really well over the last little while, also one of the winners in recent days as well. Financials, unfortunately, and industrials are a little bit down today. We see the US opening this morning down 1.4%. Obviously, it's still early in the morning for them. But I do think that the Fed uncertainty that's been around for the last little while is quite troublesome at the moment. We are even seeing flows into EU bonds hitting records, which could indicate that people are a bit nervous with the underlying US economic stability that we have at the moment.
And talking about that US stability, is it also maybe to do with the economy as well? Because we did get that ISM manufacturing, that PMI really signaling that the manufacturing sector is in in contractionary territory. Your thoughts on that?
Yeah, look, I do think that what's happening right now in the US is quite troublesome, because you remember what Trump is doing is he's basically putting big tariffs on, removing them, changing the conditions, suddenly focusing from China to India. All those kind of things are really troublesome, because if you had a tariff in place, let's just say you put a 30% tariff in China, what you can do then as a US company is figure out just how much it's going to cost you to import from China. If it's cheap enough, you continue to import it from China. If it's more expensive, then you build a local facility. That's the idea. However, if you don't know if it's going to be 10 or going to be 50, if you're the guy that builds when it's 10, you're going to lose out. If you're the guy that doesn't build when it's 50, you're going to lose out. And that, I think, is what is the real issue at the moment. It's the fact that the uncertainty levels at the moment for manufacturers, I think, is probably going to be quite high. Even, for instance, look at Apple. Despite that gold bar situation, for those that don't recall, Trump got a gold bar from Apple or a gold phone or something like that there. There's some issue around their productions in India as well that's going to mostly be affected by these kind of things. And the question is, what caused that problem in India? There's discussions that maybe it's a deal with Pakistan that was involved between Trump personally and some Pakistan individuals that caused that. And those kind of things, how do you as a manufacturer plan around that? And I think that's one of the reasons that we're seeing this kind of difficulty occurring.
All right. Well, let's get into the JSE company news. Of course, we know that we are in the middle of results season. ShopRite coming out with its full year results. The food retailer posting record sales and growing the bottom line by double digits. The stock rocketing about 5%. Is there just no end to growth for the stock?
Look, I think probably not. I do think that the nature of retail is changing. We are going more towards delivery. And if you have delivery, it's much better to be a big player in an area than to have multiple smaller shops around. Delivery basically gives a huge advantage to Amazon over a mom and pop shop, in the US. It gives a big advantage to a ShopRite over some of the small retailers in South Africa. And I do think that is going to only compound going forward. I saw, for instance, Pick n Pay had a couple billion they're putting towards a restructuring plan. What does a couple billion mean when your competitor, ShopRite, is doing basically $250 billion? You know what I mean? 250 billion a year in revenue. That obviously indicates the differential in terms of size and ability to spend. And I do think that over the next couple of years, retail is going to be something that's require capital, because you have to build up these the different kind of infrastructure to cater to the delivery system that you're going to be looking forward into the future.
And actually, quite interesting, because they did also come out with the sales that they make from 60/60. I think it was for the first time, and actually Simon Brown pointed out that sales number, that amount that they make from 60/60 is close to Pick n Pay's market cap. So really interesting to really put those numbers into perspective. Well, as we're talking about sales, let's go into car sales. Motus released the annual results today, highlighting that that year was a tale of two halves. We did get for the full year revenue slowing by 1%, but headline earnings per share climbing by 5%. The share climbing they're almost 4% the last time I checked. What did investors see in those numbers?
Well, if you look at Motus here, South Africa, obviously, car prices are, indicative of car sales, or indicative of the ability of people to pay, but also things like interest rates. Interest rates coming down a little bit is going to make it easier for you to buy. The market didn't react too much to the news. I mean, on the day, for instance, the share price was changed by, I think, 0.01%. So that's not really a moving here or there. Over the last year, this share price has been, quite under a bit of pressure, down about, say, 16%. I do think that the underlying, economy in South Africa doesn't really, help a company like, Julius Motors. I do overthink that, they would have to adjust. They're looking at, for instance, playing a bigger part in the used car sector. I think that's going to be obviously a more important factor going forward. If you look at about the used car sector is going to be quite important. But I also think if we had to look at the car market recently and look at, for instance, the global situation, I think the rise of China is going to be a huge factor going forward. You're seeing Chinese cars coming to the market right now that are effectively same quality, in inverted commas, as the established brands, but often at prices that are 30, 40, even 50% lower. And I think in a country like South Africa, that's probably going to make a huge impact going forward. And whoever wins that particular market, I think, is going to be a huge player in the SA car sector going forward.
All right. Well, let's take a look at your stock pick for today, Viv. What are you choosing?
My stock pick for today is going to be Amazon. I do think that, you're looking at just what's been happening globally in the US at the moment. I think that you need to have the kind of size that's going to be able to weather the tariff situation. And so when you have these kind of uncertainties, it's best to be the biggest player in the market. And so the Amazons and the Walmarts of the world are probably going to be better able to handle the uncertainty in the US than some of the smaller players out there.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money today, Viv. Really appreciated. That was Viv Govender from Rand Swiss Offshore.